Alright, welcome to this lesson. In this lesson we'll be looking at trading plan. What is a trading plan and how to develop a trading plan so that you can take your trades clearly and carefully. You may have heard the saying that failure to plan is planning to fail. So if you don't want to fail in this forex business, you must be ready to make your plans and then follow your plans. Make a plan, trade a plan. If you don't have a plan to the market will deceive you, and then you end up taking trades you don't want to take. So first of all, the trading plan is an insight to what you want to see in the market before taking any position. There are things you might want to see. If you don't see them, you're not taking any trade. So for a typical trading day, for me, I've given you a trading plan for free. This is my own personal trading plan and it will help you a lot. So first of all, let's start. How do you develop an attitude into the market before you trade? So before you trade, on my trading day, number one, you get up early, be around 7 a.m. in the morning. Then you go over the routine. It's a routine you're going to go over, and then you take a deep breath and enjoy all the. Just make sure you free yourself, walk around your house, just be free, and then meditate and get concentrated because you need your concentration to trade properly. So if you don't feel well, you don't trade. It is very important you feel refreshed and you are okay and ready to trade. Then you have to do what we call a trading checklist. Alright, and you make sure you know every single point of it. Do a trading checklist. Look at the currencies that you might want to trade. Check them properly. Check all the currencies properly and look at how they are moving, the direction they are moving. And also you check out the news. In one of our videos where I taught you in fundamentals, I taught you how to read news, how to know if the news is going to be impactful or the news is not going to be impactful. You go to forexfactory.com, you get the news for the day, and look at the currencies that have the news and avoid them. Or rather, look at the time the news will be coming up, and then you're waiting to avoid trading at that time. So after that, the next thing you should do is to start analyzing. You delete every analyzed pair and do it again so that the story will be built again, and be very focused and adhere to all critical criteria. So when you are building your trading story around the charts, you're looking at the charts, you should be more careful and be very focused on the charts. Don't be distracted. Make sure you are looking for the setups, the market structure that gives you the best setup. Alright, make sure you're looking for a clear trend. The market has to be clear trending. That's why in your checklist you must look at the markets that are trending. Alright, and after you've done that, you select only 1 to 3 setups every day. Don't pick more than 1 to 3 setups. Okay, we should completely understand their structure. Write down how you would like to trade them in your journal and your trading checklist. Note every move on them, forecast the move and what you want to see. If the move develops, perfect. If it doesn't, you let it go. So this is where a trading plan is very important. From all we have been learning, it is now for you to have a trading plan. Because if you don't have a trading plan, you will not have a way, to determine how you want the market to move before you enter. So if the market is not creating clear structure of lower highs and lower lows in the downtrend, or higher highs and higher lows in an uptrend, you are not trading. So look for 3 structures that are creating that best structure, then be ready to trade alongside with them. Then also the next point is that you have to wait patiently for the price to develop. Wait for the candles to close. If the candle doesn't close, you are not trading. You must take trade in line with the direction of the market. So you must wait for the candles to close. For example, if you are doing a 50% retracement of Fibonacci, you must be ready to note that the candles close before you take the trade. And then you need to know your trading time. Are you trading during the New York session, or you are trading during the London Open, or you are trading the Sydney session? So you have to note the area or the place, the strategic time you want to trade. Alright, so you don't rush into taking trades when the trades have not developed. You must wait patiently for the candles to close and show you the clear direction the market is moving. So master your candlestick patterns, because that is where you will be able to get clues to when the market is about to move in a direction. So know that you must not trade every day or every time. You have to make sure you follow the volatility of the market. Make sure you know the volatility of the currency pair you are trading, and then be ready to trade alongside the same volatility. The next one to talk about is in the trading plan is looking for your support and resistance, areas where the market can form swings, and then be ready to turn or change direction. All right, so there are things you have to look for in those areas. There has to be at least 2 bounces, 2 rejection candlesticks has to be there. If you don't see 2 rejection candlesticks, you are not taking the trade. This is very, very important. All right, and there has to be a price zone, and you can make it maybe a rectangle or something like that. All of these things are very, very important. The highest points of the market, or you look for the wicks, you look for areas of supply and demands where price has strongly left. Then you use your Fibonacci to check your 50% retracement levels, and then you can draw your trend lines to mark your support and resistance levels, and then you can do your analysis, what we call top-down analysis. Don't forget this top-down analysis, which can be from the daily to the weekly to the 4-hour time frame, and then it will help you to actually know the overall direction of the market, because the market will always move in the direction of the higher time frame. This is so important, and it is something that you don't want to miss out in your trades, because if you don't know the direction the market is going, you cannot trade alongside with it. So the next thing we want to talk about is in the trading plan, we're going to look at money management. Now, in money management, before you take a trade, you also have to consider how much you want to gain in the market and how much you are ready to lose. All of these are factors that you must consider before taking any trade. Very, very important factors, because if you don't know how much you want to gain in the market and how much you want to lose, you can lose more than is expected of you, and at the end of the day, you will not make profit from the market. So it's important that you know exactly how much you're ready to gain, how much you're ready to lose before you enter the trade. So for example, in the trading plan, you can say, okay, I'll be risking 2% of my account per trade, depending on your account size. This is so important, depending on your account size. All right, this is depending on your account size. You have to know how much you are ready and willing to lose. Very, very important. So you have to also consider maximum trades you're going to take per week or per day. For example, you are not supposed to take more than 4 trades in a day. More than 4 trades in a day. And you must consider the correlation of the currency pairs you are trading, so as not to be trading against each other. Alright? Then also, you make sure that you're not rushing into trades. So once your trade hits take profit, maybe you're taking 3 trades and one of your trades hit take profit and 2 hit your profit target, you look to step away and maximize risk. If opportunity arises, you act on it, but lower the risk. You must always make sure you lower your risk at every point in time. Once one of your trades hit take profit, maybe you take 4 trades, 2 hit take profit, the other ones at break even, it's okay. You leave the market for the day. You must not fight the market. And when you lose, don't try to beat the market. Don't try to get your money back. It is part of trading psychology, because you will end up losing more than you should. Alright? So you don't fight the market. You don't try to override the market. Make sure you are consistent. Alright? Consistency and patience is the key to trading forex successfully. So this is why you need a trading plan to help you align your priorities right, so that you don't end up acting without knowing what you're doing. It is very, very good. So when you take, for example, you have kind of a target to achieve 6 figures. Maybe 10% per week will give you $5,000 in the $2,000 per month, 24,000 per year in 3 years. 10% a week will give you 10,000, that's $4,000 per month, 48,000 per year, 2 years. All right, things will not always look like this, but always remember the plan. There will be losing week, months, and even years. There are some weeks you'll be losing, there are some months you will lose, but all the same, you will always end up profitable if you follow your plan. All right, so you always think long term. You trade like one trade with 1 million. Be a professional, not a gambler. So it's all about how much you make, but how much you lose. All right, you must be ready to lose. You must be ready to lose. Forex is not just a win-win-win game. At some point you lose, at some point you gain. But once you have a trading system and a trading plan, you will be able to minimize your losses. Because nobody can predict this forex market 100%. But with a trading plan, you can be able to maximize profit and minimize risk. So money management is very good. Know how much you are willing to gain in every trade. Don't over trade. Don't take 3 trades, 10 trades running at the same time. No, you won't make money like that. Take one trade at a time. Use a very good risk to reward ratio, and once you are 50% on your trade, break even. In our last lesson we talked about break even, and in one of our lessons we talked about break even, where we said you can move your stop loss to your entry level, and then if the market reverses against you, you don't have a problem. Once the market moves in your favor, make sure you break even. All right, so that is very, very important. So trading plan is one of the things you must have in your journal. So as a forex trader, get a journal, get a book where you'll be writing all your trades, how you took the trades, what happened with the trades, why you lost, why. Because if you don't know why you are winning a trade, you will not be able to take another trade the same way. And if you don't know why you lose a trade, you will not be able to learn from your lesson and then move forward to maximizing that experience. So it is very important to create a trading plan around your trading. So another thing I want to talk about is the psychological notes. You must have to say to yourself, I am a consistent winner, because I objectively identify my edges. So you have to believe in yourself. The way to be objective is to operate out of beliefs that keeps your expectation neutral and to always take the unknown forces into consideration. I predetermine the risk of everyday trade. You have to predetermine it. I'm risking so to get so. I completely accept risk, or I'm willing to let go of the trade. I act on my edges without reservation or hesitation. I pay myself as the market makes money available to me. I continually monitor my susceptibility for making errors. I understand the absolute necessity of these principles of consistent success, and therefore I never. So now, why are you saying all of this to yourself? So that you can condition your mind to begin to believe, to begin to accept your trading strategy, and then it improves your psychology in the market. Trading psychology is very important for beginner traders, because at some point when you lose, you want to break your computer screen, you want to scream, you want to be angry, but at some point you get to relax and then ask yourself, okay, what did I do wrong? Where did I go wrong? And then you adjust yourself and then become a better trader. So this is why you need a trading plan. Have a plan for your psychology, have a plan for your risk, and then have a plan to enter into the market. Know when to enter. Have a trading plan. I'm going to trade London session. I'm going to trade as from 2 p.m. to 4 p.m. every day. I'm going to take only 2 trades a day and stick to it. Get a trading plan, stick to it, and that is how successful traders become successful. If you don't have a plan, you plan to fail. It is very, very important that you have a trading plan. Very, very important. So with your trading plan, you'll be able to say, okay, I'm using social entry patterns to enter the market. From there, you will know the candlesticks you want to be using. That's why I said you have to backtest everything you learn in this video. Go home, open a demo account, and start trading at least 2 to 3 months and be perfect in it before you go live, so that you can learn some of the candlesticks that are important in reversals and in continuations. One of the videos we did on candlestick patterns, I taught you on the candlesticks that are very important in trade. So you must learn those candlesticks and know how to apply them carefully, so that you can make the most out of your trading. Alright, so that does it for this video. A quick recap is that with a trading plan, we're able to get insight into the setups that could happen, and then we have to know what we are doing. Alright, so we're entering the market, and then we're looking for some things. What are the things we're looking for? We're looking for setups, we're looking for higher lows and higher highs, we're looking for the trend, we're looking for Fibonacci levels. Alright, we're looking for candlestick patterns, we're looking for a clear direction market, we're looking for an entry, we're looking for where we can put our stop loss, where we can take our profits. All of these things, you must write them down and consider them before taking a trade. And don't forget correlation. You must know the pair you are trading, which pair is it correlated to, so you don't end up trading in the same direction or opposite direction of another currency pair. All right, you must know which currency is weak and which one is strong. From I will talk about how to know your trading bias. I give you an expo on that. All the websites I talked to you about, you check them and confirm, and then you are ready to go. So put down all these points. All right, put down all these points. It becomes your trading system. You look at all of these things before entering the market. So that is how a trading plan. All right, thank you so much for listening.